Hey guys, what's going on? It's your boy Marco, aka MercFX, and I'm gonna run through today. Can you be profitable with only a 30% win rate? Let's go. So, the core thesis. So, the common myth success is defined by how often you are right, which is in trading. And then the reality success is defined by the magnitude of your wins versus your losses. So, pretty much the trade offs between scalping and swing trading, that's what I'm going to be talking about mostly here today. Scalping, it's a high frequency, high win rate, but normally low risk to reward. While as swing trading is low frequency, lower win rate, but normally higher risk to reward. So the number one thing you need to do is understand the maths. So trading success isn't win percentage, isn't trying to flex my 80% win rate strategy, my 90% win rate strategy, blah, blah, blah. It's the actual returns you make year on year. So pretty much how to determine your win rate is your winning trades divided by your total trades times 100. So if you've got 35 winning trades with 120 total trades for the year, times that by 100, you've got a percentage of 29.17% of a win rate. So which can be profitable depending on your risk reward. The conclusion, so you can be wrong 70% of the time, still build a fortune if your wins are larger than your losses. So it sounds pretty crazy, but I mean, it's totally true. Just simply facts. That's all right. We got profile A. So the 90% win rate scalper. So their strategy is capturing micro moves for quick profits. So this is like the 1 minute time frame, anything or between. Structural flaw. So to maintain a 90% win rate, scalpers often use wide stop losses and tiny take profits. So a lot of the times they have win rates of like 1 to 0.5, 1 to 0.3. I mean, something so tiny. So like you're risking $100 and you only make $50. Like it's pretty much a negative risk reward. Okay, so the black swan risk. So one momentary lapse in discipline or a news event or any kind of big volume can wipe out a lot of your consecutive wins if you're helping. So with these tiny stop losses on, as I said, news events where there's big volume, your stop loss can get absolutely like shredded, and you end up getting stopped out for a lot more than where your stop loss was placed, which sucks. So the math, pretty much winning $10 9 times, losing $100 once, the net loss of $10. So even though you win 9 times but you lose once, like you're in the negatives. You haven't made any profit. Profile B. So this is the 30% win rate swing trader. So the strategy, capturing large trend cycles over days or weeks. So I look at the 4 hour time frame, but you can pretty much see weeks within the 4 hour time frame. The power of symmetry. So a typical swing trader aims to make 1 to 3 risk reward. This is just my own basis of things. I mean, I've seen 1 to 2, 1 to 1, 1 to 5. It's never normally above 1 to 5. 1 to 3 is pretty much a sweet spot for a lot of swing traders. Okay, so the maths breakdown. So 7 losses at $100 each is negative $700. 3 wins at $300 each plus $900. So you make a net profit of $200. So which is the result. Success is mathematically guaranteed despite failing most of the time. If you've got a 1 to 3 risk to reward ratio and you've got a win rate that is higher than 25%, you've got a win rate of let's say 26%, then you are technically profitable. Take 26, if you take 100 trades, 26 of them are winners. Like you will make money. You will be in profit if it's at a 1 to 3 risk to reward. Pretty much anything above 26 profitable and you can make money. And although it is just chance, there might be 1 year where you don't make money because you've got a 27 or something, or 28% win rate. But over the long term, if you keep that win rate, it will be profitable. All right, the hidden costs of scalping. So not only just your wins and your losses and your profits and losses. There's a lot of other things that come into play like swaps, commissions, you name it. There's tons of things. So number one, trading friction. So commissions, spreads, and slippage. It can eat away from your 90% win rates, or your profits in general, just because of sheer high volume of trading. Number two, execution risk. So scalping requires perfect entries. Even a 1 minute lag can turn a win into a loss. So it's a pretty, like, the hidden cost like there is almost like the stress. You need to pretty much be perfect. There's little room for error. So once you do make an error, um, it's hard to, like, you cut you'll that win will be gone. They'll either turn into a loss or you've missed the trade. And then there's the bot factor. So you are competing against high frequency trading bots and algorithms that have billions and billions of dollars of infrastructure. So just another thing to keep in mind. The psychological reality. So scalping, which is a higher stressed form of trading, requires hours of intense screen time daily. Thing is, I've never actually scalped. I've never really day traded. I've only looked at friends, like trading friends that have, and every single one of them have described me this exact situation. They've gone from scalping and they've eventually just moved on to swing trading simply because of the stress environment. They've moved from a high stress environment to a lower stress environment. So scalping requires hours of screen time. One loss triggers revenge trading to protect that high win rate ego. So it's you need to keep that high win rate up if you're a scalper, just because of the lower risk to reward ratio that you've got. All right, and then we've got swing trading, which is a lower stressed environment. So analysis is done on the 4 hour charts. This is me personally. I know people that do it on the 1 hour or the daily even. Anything like that is fine. Set and forget approach. This allows for normal lifestyle and clear-headed decision making. So pretty much you don't have to spend hours in front of the screen. I mean, I spend like 15 minutes a day doing it, like pretty much like 5 to 10 minutes in the morning, 5 to 10 minutes at night, just checking my trades. So really it's like anywhere between around 15 minutes to do a day. So compare that with hours and hours of scalping just to make it more stressed and harder to make more money. I think it's just simply not worth it. I think trading is the go-to. I've got a table here, so I'll read out a bit of the points. So we've got 90% scalpers, and then we got 30% swing traders. So risk reward is low for scalpers, and it's positive for swing traders. So 1 to 3, 1 to 5, whatever, even 1 to 1, that's fine. Time spent, so yeah, 30 plus hours during the week scalping. I mean, depends how long you really trade for, but like it would be hours on end, like per day. Swing trading, it's only really like an hour, hour and a half, 2 hours per week. Really don't do much, which is great. Stress level, extremely high for scalping. I mean, yeah, it's just hours on the chart, and really just can't miss trades. It sucks, and everything's just so fast paced. And then swing trading, stress level is moderate to low. So I mean, you could even put that just simply low, because you don't spend much time on the charts. It's hard to miss trades when you're on the 4 hour time frame. 4 to 8 hours have to pass for you to miss a trade, which is a long time. Transaction fees, as I said, that kind of incorporates all the other things like spread and stuff like that. When you're scalping, it's just such a high volume, and it's just stop losses and stuff like that. Where you can get shredded, and just rip through. It sucks. While on the other hand, swing trading, it's very minimal, so it's easy to get tapped in. Um, and you're not taking as many trades, so you don't have to pay for as many commissions, stuff like that. Then pretty much what I think might be the most important thing is longevity. So The scalpers, the longevity is pretty low simply because of burnout slash blowout. So it's hard to just keep that lifestyle up for more than like a few years. I mean, think of it, if you're a scalper now, could you imagine yourself doing that in 20 years where you've got like a wife and kids, a family to take care of? You've got to spend hours and hours in a high stress environment every day just to scalp. Like it's just not ideal for a trader. And then 30%, so the swing trader scalability, it's very high. Um, since simply because it's a more of a laid back environment. You can scale on prop firm accounts. You can scale pretty much on your time as well. Profits. I mean, swing trading here um, takes the point for every single. All right, so I've got here 30% win rate. Like so, the key differences. So this equity curve shows the swing trading simulation. So this simulation is done 20 times. You can do this on equity curve simulator. You can pretty much do that on any website. I've got here a 30% win rate, 1 to 3 risk rewards, and then 150 trades. This can be like a yearly simulation. So the biggest drawdown here in these 20 simulations was 23.3%. So not too bad. That's pretty much a 23 RR sort of loss streak. That loss streak includes wins and stuff, but um, like it's just your overall from your highest point to pretty much your lowest point. It was 23.3%. The average performance here. So this is again, it's just risking 1%. Average performance here was 46.1%. So out of these 20 scenarios, 20 simulations, the average is 46.1%, risk 1%. So if you risk 2%, I mean that's 90 plus risk. That's 90 plus percent return on year. So I mean that's like pretty much doubling your money. Here we've got a max consecutive loser, so 19. So 19 losses in a row. Like, which doesn't include break evens, but yeah, pretty much just between wins and losses, it'll be 19 in a row. So it's not amazing, but it does happen with lower risk rewards, lower win rates. And then we've got max consecutive winner, so 5. So that's actually pretty huge. I mean, 5 times 3, 15. Like that's just 15 RR just straight up with no losses. If you got a 1 to 3 risk reward. Pretty much in summary, stop chasing that green streak. So that win rate, those consecutive winners, that doesn't matter at all. At the end of the day, what matters is how much you make year on year. It doesn't matter if you had 100 winning trades in a row. I mean, that seriously doesn't matter if you're not making any money. The winner out of this whole situation is 30% swing traders simply because of maths, peace of mind, long-term wealth, compounding, and longevity. And then final point, it's better to be a profitable loser than a broker winner. So, I mean, people can laugh about your 30% win rate or 35% win rate, which means you lose pretty much you only win 1 in 3 trades. But at the end of the day, with peace of mind, longevity, and overall, more than likely, more profitability, it's really a no-brainer why you should be a swing trader. Thanks for watching. You can follow me on Instagram and subscribe to me on YouTube. Send me a DM on Instagram. I'll make sure to get back to you. Happy to answer any questions, review trades, whatever it might be. And I'll see you in the next one.